Institutional blockchains, the networks built for global finance today. We're going to focus on a very specific part of the blockchain industry that many people believe could play a major role in the future of global finance. Not meme coins, not speculative projects. We're talking about institutional-grade blockchain networks. These are the blockchain systems designed specifically for banks, governments, payment processors, and global financial institutions. To understand why these networks exist, we first need to understand how the financial system works today. Every day, trillions of dollars move around the world through systems built decades ago. Banks communicate through financial messaging networks. Payment processors handle card transactions. Settlement systems manage securities and international transfers. One of the most important systems in global banking is SWIFT, a messaging network used by thousands of banks to send payment instructions to one another. But these systems were designed long before digital finance became global and instantaneous. Because of that, cross-border payments can sometimes take several days to settle. Transactions may pass through multiple intermediary banks before reaching their destination. Blockchain technology introduced a new idea. Instead of every bank maintaining its own ledger and reconciling transactions afterward, participants could share a distributed ledger where transactions are verified collectively. In theory, this could make financial settlement faster, cheaper, and more transparent. But not every blockchain network is designed for this purpose. Some networks focus on decentralized applications, gaming, or digital collectibles. Institutional blockchains are different. They focus on financial infrastructure. One of the most widely discussed networks in this category is XRP. The XRP ledger was designed to help facilitate cross-border payments between financial institutions. The idea behind XRP is that it can act as a bridge asset between currencies. Instead of banks holding large amounts of foreign currency in accounts around the world, they could potentially convert value through XRP to settle international transactions quickly. This concept is sometimes described as on-demand liquidity, where funds are converted instantly rather than pre-funded across multiple banking corridors. Another network often mentioned alongside XRP is Stellar, whose native asset is called Lumens. Stellar was designed with a similar goal, enabling fast and inexpensive global payments. However, Stellar places a strong emphasis on financial inclusion. The network aims to connect banks, payment processors, and digital wallets so that people around the world can send money across borders more easily. In regions where traditional banking access is limited, systems like this could potentially reduce the cost of remittances and international transfers. Next, we have Algorand, a blockchain platform built with financial-grade infrastructure in mind. Algorand was created by MIT cryptographer Silvio Micali and focuses on speed, security, and reliability. Its design allows transactions to settle quickly while maintaining strong cryptographic security. Because of these characteristics, Algorand is often discussed in conversations about tokenized financial assets, including digital securities, government bonds, and other financial instruments. If financial markets eventually move toward tokenized assets traded on digital ledgers, platforms like Algorand could potentially serve as the underlying infrastructure. Another network that often appears in discussions about institutional blockchain systems is Hedera. Hedera uses a different consensus technology known as Hashgraph, rather than a traditional blockchain structure. One of Hedera's defining features is its governance model. The network is overseen by a council made up of major global companies and organizations that help guide the development of the platform. This type of governance structure is designed to provide stability, accountability, and predictable decision-making, qualities that large institutions often look for when adopting new technologies. Then there is the XDC network, which focuses on global trade finance. Trade finance is the system that supports international commerce. It includes things like invoice financing, shipping documentation, and supply chain financing. This industry involves trillions of dollars in transactions every year, yet much of the documentation and verification process is still handled through complex and sometimes outdated systems. XDC aims to digitize and streamline these processes using blockchain technology, potentially improving efficiency in global trade. Another project that appears frequently in discussions about institutional infrastructure is Quant. Quant focuses on interoperability, the ability for different blockchain networks and financial systems to communicate with one another. Its platform, known as Overledger, is designed to act as a bridge between traditional financial infrastructure and multiple blockchain networks. If banks and financial institutions end up using several different blockchain platforms, technologies like this could help connect those systems together. Many of these networks are often mentioned in connection with ISO 2022, a new international standard that banks are adopting to structure financial transaction data. ISO 2022 is essentially the next generation language for global financial messaging. Some blockchain projects are being designed to work alongside this standard so that financial institutions could potentially integrate distributed ledger technology with existing banking infrastructure. Now, it's important to understand something about emerging technologies. Just because a technology has potential does not guarantee that every project will succeed. If we look back at the early days of the internet, thousands of companies were created during the dot-com boom, but only a small number eventually became the dominant platforms we rely on today. The same pattern could happen in the blockchain industry. Some networks may become important pieces of financial infrastructure, others may fade away, and entirely new technologies could emerge that improve upon current systems. For now, the most important thing to recognize is that the blockchain space is evolving in multiple directions. Some projects focus on decentralized applications and open financial systems. Others focus on building infrastructure that could integrate with banks, governments, and existing financial institutions. Institutional blockchains fall into that second category. They represent an attempt to modernize how money, assets, and financial information move across the global economy. Whether these networks ultimately become part of the future financial system remains uncertain. But they are among the technologies being studied and tested as the world explores new ways to build digital financial infrastructure. And the outcome of that experiment may help shape how global finance operates in the decades ahead.